Assalamu alaikum. I am often asked what is the best time to invest. People are understandably nervous about the stock market right now as it seems kind of frothy and disconnected from the real economy. So a lot of people are predicting that the market may experience a correction or even a bear market in the near term, and they are nervous about deploying more cash into the market. So in this video, I'm going to give you my take on when is the best time to invest. And basically, you can summarize my take with one word. I will reveal what word that is at the end of the video. Let's see if you can guess what word that may be. And without further ado, let's get started. The first point I'd like to make when answering the question of when should you invest is to emphasize probably an obvious point, but I think it's an important one, and that is don't invest money that you can't afford to lose. So you should only invest money when you have money that is in excess of what you think you're going to need in the near term. If you invest money that you're going to need in the near term, and the stock market does experience a correction or a bear market, you're forced to sell at a loss. And then what are you going to do to make up for that loss? Because after all, you needed that money. You may be forced to borrow money, and you really never want to put yourself in this situation. Additionally, if you're investing money that you can't afford to lose, any small changes in the prices of your stocks or any changes in the market or any news headline may cause you to panic and make irrational decisions that cause doo-doo to snowball. And you definitely want to avoid such a scenario. You just don't need that kind of stress in your life. So again, the first point about when to invest is when you have money that you're not going to need in the near term. The second point regarding when to invest is, again, an obvious one, and it is when you know what you want to invest in. So you're going to want to build a portfolio of stocks or ETFs or index tracking funds that you want to invest in, and you want to assign for each asset what weight you want it to have in your overall portfolio. And for an example of this, you can go to the description of this video to see the Practical Islamic Finance portfolio, which basically consists of the stocks that I've chose on this channel. So now, assuming you have money set aside that you're not going to need in the near term and you know what you want to invest in, now the tougher question is, do you invest all that money in one fell swoop? Do you wait for a correction in the market, so you buy the dip? Or do you just dollar cost average? Divide the amount that you want to invest into different amounts and invest each amount at a certain set period. So either weekly or monthly or however you want to set the schedule for when you invest. To answer this question, I would say if you're a long-term investor, then buying the dip rarely ever makes much of a difference. Legendary investor Peter Lynch, who averaged around 30% returns for the 13 years in which he was managing the Magellan Fund, once did a study wherein he compared the investment returns of someone who was investing $1,000 a year for 30 years, and every year he would invest at the worst possible time, so when the market was at the peak for that year, and another investor who was investing $1,000 a year for 30 years and investing that $1,000 at the best point in time during that year, basically when the market was at the lowest point during that year. He compared the returns for these two investors after 30 years, and he found that the investor that was investing at the worst possible time, when the market was at its peak every year, averaged around 10.6% annualized return, whereas the investor that invested at the best time every year for 30 years averaged around 11.7 annualized return. So the difference of just 1 percentage point between the two. And that's assuming these two were polar opposites in terms of their ability to time the market. One had impeccable timing of the market, being able to invest at the lowest part during the year, and the other had the worst timing of the market, investing at the absolute top of the market for that year. When you compared the two, there was only 1 percentage point difference. And now when we consider that timing the market perfectly is absolutely impossible, it's very likely that someone who isn't timing the market is going to do better than someone who is trying to time it. So I'm really not a fan of timing the market. I've been investing long enough to know that more money has been lost waiting for a crash than has been lost in the crash itself. I mean, yes, a crash will happen eventually. It's like any projection. If you keep making the same prediction for long enough, eventually it's going to come true. But as a strategy, waiting for that to happen, I think, is going to be a losing strategy more often than not. So if I'm starting to invest with a small amount of money, then I would just start immediately. Once I've determined the portfolio that I want to buy into, I buy into. However, if I'm starting to invest with a large amount of money, I would definitely dollar cost average. And the reason why I do that, and what I mean by dollar cost average, is divide that large chunk of money into different amounts and invest each amount at regular periods of time, so weekly or monthly or however you feel comfortable. And the reason I say that is because I like my investment experience to be as painless as possible. If I invest a large amount of money at one point in time and the market loses 30% of its value or 40% of its value in the next month, that's going to be really painful. So I want to avoid the chance of having that unpleasant experience. And I do so by divvying up large amounts of money into smaller chunks and investing them on either a weekly or bi-weekly basis. And you can do a longer period of time, whatever makes you feel comfortable. Having said this, it's rare for the average investor to be investing a large amount of money at one time or have a large amount of money that they want to invest. The more common scenario is that you have some amount of money, a smaller amount of money that you'd like to invest. And in which case, I go with the portfolio approach to investing. So for example, let's say I have a portfolio that has 75% target weight for Tesla and 25% target weight for Lemonade. And let's say that because of the price movements of both stocks, Tesla is now at 80% of the portfolio and Lemonade is at 20%. The next time I invest money, I'm going to use less than 75% of that money to buy Tesla, and I'm going to use more than 25% of that money to buy Lemonade, so that the weights of both positions are brought back to the target weights that I set for them, which is 75% Tesla and 25% Lemonade. If you use M1 Finance, this is done automatically for you. And again, if you live in the United States and you'd like to try M1 Finance out while supporting the channel, use the link in the description below. So in summary, as a long-term investor, I would say the answer to the question of when to invest is regularly. Remember the hadith from the Prophet, peace be upon him, أَنَّ أَحَبَّ الْأَعْمَالِ إِلَى اللَّهِ أَدْوَمُهَا وَإِنْ قَلَّ. which means the most beloved deeds to Allah subhanahu wa ta'ala are the most long-lasting, even if they are small in nature. And I think that is a very good guide for building wealth through investing. I hope you found this video beneficial. If you did, I'd really appreciate if you left a like, subscribe for more content. Until next time, make sure to take care of yourself. Assalamu alaikum and peace be upon you all.